So the Colombian industry and economy has seen reduced its economic potential, of course, on account of the COVID-19 pandemic. There is a great degree of uncertainty about what is the aftermath of this sanitation and health emergency on the economy and the economic toll. Hence, we welcome the Minister of Public Credit and Finance, Dr. Alberto Carrasquilla, Mr. Gerardo Hernandez, co-director of the Bank of the Republic of Colombia, and also Dr. Sergio Clavijo, external consultant, who will give us their take and forecasts what has to do with economic issues in this panel called Perspectives of Economic Recovery. This panel is to be moderated by Miguel Gomez Martinez, Executive President of FASECOLDA. And good morning. It's a pleasure to have such an illustrious group of economic experts talking to us about our economy. Without further ado, I present the Ministry of Treasury. Thank you for your time with the insurance industry, sir. Good morning, Mr. Miguel. Good morning to all attendees. It is for me a pleasure to be here once again in this convention of yours. It's particularly joyful for me to salute Dr. William Fadul that I haven't seen in a long while, and I expect to see you soon and be able to benefit from your ideas and always your constructive and creative take on things. Deepest greetings to you. I'm glad to share this panel with Dr. Gerardo Hernandez and Sergio Clavijo, two great and dear friends that very surely I'm going to learn from your presentations today. Very special greeting to you, Mr. Miguel Gomez, Dr. Javier Suarez, Chairman of the Board of Directors, and for the invite. It's not the first time I'm here, hence I haven't messed up entirely on previous occasions, and I deserve being invited again on this occasion. So I would like to start my presentation that I've divided on 3 parts. For the first portion, I'd like to speak about the topic that brings us here, which is economic reactivation, but from the point of view of the fiscal challenge, because this economic reactivation implies huge fiscal hurdles. Then the second part that I would call a footnote, which is the new fiscal complexities that have appeared just on this 2020 on account of these situations. And then I'd like to close by looking into the future in a part of the presentation I'd like to call towards a virtuous fiscal cycle. So let's look at some initial indicators. This is a pretty well-known one. The performance of our economy in the second quarter of the year, just as many analysts anticipated from the government and elsewhere, that said would be a particularly painful quarter. We are simply portraying here the economic activity, the GDP, the national growth rate, or yearly growth rate of the GDP. We were already coming from a difficult period, and we had this strategy that was particularly manifested in the second quarter. We're not looking at unemployment rates here. We're not looking at the deterioration of our social indicators, but this strategy is the background of this huge second Q that we had. The following slide, I want to show 2 things. First one is the way in which the forecasts have been changing a long time, and expectations have been changing from left to right. You see the forecast in different time periods, where you see that for the first quarter of the year we had in Colombia, and this is just a sample of the most outstanding analysts in our country, where we had pretty much a straight line, which is what has always characterized our activity here in forecast and analysis about the economy in Colombia, and very moderate expectations looking at the idiosyncratic, if you will, or specific ideas of each analyst. And you can also see the how scattered this forecasts are. And so as we move through the year, from the first Q to the month of April and May, the forecast on a generalized note became more negative, and then the margin is widened and the discrepancy is widened between one analyst and the other. And what this means is that there's a consensus in the sense of the trend, but there is a greater dispersion in the sense of the magnitude of each effect. Now, on the right-hand graph, we have exactly the same exercise for year 2021, forecasted along different months of such year. Now, there's also unanimous opinion here saying that the economy is starting a rebound phase and a great dispersion or uncertainty about the exact degree of that rebound effect. The consensus is that the rebound will be of about 10 percentage points compared to the 2020 forecast compared with 2021. This is like the general vision that exists between the analysts right now from these surveys. Now, what I'd like to focus my presentation on is what we could understand the role of fiscal policy in that eventual recovery, in that eventual rebound, and how to maximize the size and keep this rebound going. Now, I try to describe a circuit that feeds or provides energy for this reactivation from the fiscal dynamics. That is my role. If it's a constructive fiscal dynamics, if it's positive, if our fiscal actions in history assumes in this context of this grave crisis and trying to move out of it, the first effect that we will see is in the risk perception. Risk perceptions associated to expectations from the different agents really affect financial variables such as interest rates, exchange rates, liquidity or solvency of our economy, and so on. This risk perception, if history is constructive, should go down, and this will lower the risk perception. If it's a constructive story, this will help improve the entrepreneurial environment, the short-term expectations, the appetite to assume greater risks in longer terms, which dynamizes the private sector activity, which in turn increases collections and tax collections and lets us reduce very quickly the expenditure that we had to incur upon during the emergency. And from there on, we start feeding this circuit further and further on. But we need to have a fiscal story, I say, and dynamic that generates this circle, or this virtuous circle, because this has happened in many regions of our country. You know, we have almost PhDs in generating fiscal circles in our country, or regions that are not virtuous, but vicious and harmful on many occasions. And the challenge that we have right now is to undergo this type of dynamic, and that Colombia's story from here on is a constructive one and feeding into this reactivation process from a scheme such as this. Next one, please. So what we've designed, or what we've conceived from the point of view of public spending, is when we speak of 95% of time is we need a very important access of private projects that require government or state management, require certain regulatory issues to be solved that we are facing, that we are trying to work around in the daily activities of the government, that there are projects that combine public and private investment, especially in infrastructure, that there are projects that require or have been conceived through fiscal incentives, really like the French program is a good example. And there are purely public investment projects that I want to refer to. Here's the investment flows projected in the medium term fiscal time frame, where we highlight the importance of the impulse that is given to this fiscal aspects in 2020 and 2021. This is the fourth pillar of reactivation. On itself, it will be not ineffective, but combined with the other pillars, it's going to become a fundamental axis of this recovery process. On the right-hand graph, you can see, or chart, you can see the way it's been articulated, and all of this is included in the national budget, which is going through Congress, and in the fiscal midterm that we present in June, or we presented in July. The second point I want to talk about is the new complexities that this crisis has brought upon us. First of all, complexities because we had to increase public spending significantly. We deferred to three axes of public spending. The first one is on account of the pure public and health emergency. We declared the emergency in the month of March with important shortfalls in infrastructure and educational elements and insufficient intensive care units according to what we expected would be required, with some let's say labor force in the health sector that also appeared to be insufficient back then and improperly compensated, and with the necessity to increase the spending. It's about 1 point of the GDP that we had to include here for this. Second is the population that migrates on account of economic hardship. It's a situation from non-vulnerability and now becoming vulnerable that required broadening our social protection network and the programs that we had there, where we increased fairly quickly and efficiently a program that tried to specifically look after these households and link about 3 million households under this program and have important monetary transfers, right? Direct deposits that would benefit these families, with initial operational logistics issues when we started, but now that have been corrected and I think are working just fine, with interesting external factors that were seen when we tried to associate them to the formal financial system. And third, of course, is protecting employment and the productive apparatus through programs to protect formal employment, supporting in particular. And alongside so many proposals that came in April and reached the national government, trying to make the government like a counterpart of this component of this dynamic of salary policies to be implemented, of course, to forward more and more employment. And on the side, we have many other initiatives, like the one of assuming a greater risk of what is usual for us from the government side, looking at insured credit lines of all sorts of credit lines, which is a fairly dynamic process as well. In total, we had to expand almost 3 points of the GDP, or public spending, to be able to have these three fronts working and capitalize the Fondo de Garantías, or the insurance fund. And we are just a little higher than emerging markets, looking at the disposal of these resources. Of course, more advanced economies have had greater investment, and the lower income countries have disposed of less resources. We are like mid-ground, looking at Latin America, which is the following graph, where you can see that, next one please, where you can see that this is where we are positioned, trying to separate the different components that are part of the general balance or financial statement, what's outside of the statement, and the important fiscal impositions here. This is first look at what I would call additional challenges on account of the crisis. And in this table, what you see is the second leg here. I'm not going to go into the full detail of the table. It's just to emphasize three figures here. One is what we collect just on account of taxes in 2019. We collected a total of 147 or 148,000 million pesos. We're beginning the year. This looked like a very ambitious objective. Our collections agency, the DIAN, has been modernizing itself, and finally, this is the collections level that we've achieved. starting of the year, and before having estimates about the size and the implication of the crisis to come, we were thinking back then of collecting for 2020 about 158,000 million pesos. And later on during the year, where we understood the dimension of the difficulties, we recalculated this to 134,000 million, which is our current goal. So we had backdrop there in expected income of about 23 or 24,000 million pesos, which is basically 2 points of the GDP. I'm sorry, 24 trillion pesos is what I should say. Now, looking at the footnote that I mentioned, it's an equivalent of more spending on about 2 additional points in terms of lower collections. So this is the contribution that 2020 brought to our lives. So, next one, please. So, having the necessity of generating this virtuous cycle and avoiding a vicious cycle, and looking at this times of juncture, we need to look at 2 additional things. First consideration is the international financial market, and the second is our domestic financial sector. The idea that I want to convey is twofold, because the factors that lead to a reactivation from the constructive fiscal point of view becomes difficult or can become easier depending on what's the situation of international financial market, and it will be more difficult or easier depending on what's the reality and the perspectives of the domestic financial sector. So let's start with the international sector. I believe that the message here can be captured easily. First, the situation of international liquidity is unusually positive, because for so many years in our history, and Dr. Sergio Clavijo and myself have worked so many times on this type of problems, our region has faced a situation of crisis that at the same time coincides with a total closing down of financial markets. Just a difficulty to have access to international markets, and that first component, this first part of the question, if this is going to become more difficult or it's going to be easier for us to generate this virtuous cycle, has a straight answer, and it's that it will be easier. The financial market internationally is something that, according to all outlooks, will be constructive in the sense of allowing the countries that are undergoing a serious and sustainable adjustment process will find in it, instead of difficulties in these international markets, an ally in international markets that will help them, that we need to use smartly and in the best way. The perspectives are of, at least for all of 2021 and 2022, that this wide liquidity situation, all the important central banks are moving in the same direction. And I would just highlight what has been proposed in recent days by the head of the Federal Reserve Bank in more recent statements, saying that the situation of interest rates of equal to zero or very close to zero will become a reality for as long as it's necessary. So as long as it's necessary has to do with the recovery of the economy, and of course with reestablishing of a normality in the financial markets as a whole. And we can say the same about the other important central banks, the European Central Bank, similar statements, and so on. As far as longer-term interest rates, you have seen the performance curve, for example, of the American debt and how it looks like, with rates that are starting to become of around 1%, looking at 10-year horizons, and at 30-year horizons, we're speaking of rates of 1.5% or something close. So it's a performance curve that reflects the wide availability of liquidity, the wide range of opportunities that are being presented for assets, or let's say family of assets, different to the zero risk ones, and the perspectives that this will be the midterm scenario. So that's a constructive component. And as far as the domestic financial situation, which is the other component. Luckily, we had a very strong financial sector, strong in terms of capital in general, strong in terms of let's call it first quality in terms of liquidity, in terms of risk management, what has to do with credit risk and operational risk, very well managed starting the year. And I would highlight four things that the Committee of Coordination and Follow-up of the Financial System said. That committee looks after the financial system in our country, involves all the regulators, all the supervisors and economic authorities that are answering and looking after the financial system. We have the superintendent of the financial sector. We have the Ministry of Treasury. We have the Bank of the Republic. We have FOGAFIN. And in that committee, there was a great discussion achieving 4 points that I really want to show to you. First, public pending collections and the balance of the credits in our country remained constant or very stable between the month of March, when we started the crisis here, and the month of August. That's important because this strengthened position allowed us that since mid-March, the financial market was able to restructure itself in the magnitude of 30% of what it was owed, in terms of two specific lines. When we have expired terms that have already started and entering this special support time frame for debtors. And this special support for debtors is a plan that has been moving on and moving full steam right now, that has been very successful in terms of facing through a strengthened financial system and the realities, of standing credits right now and the current economics. Now, we have similar risk levels as in previous periods. We don't see any deterioration in these indicators, not in credit, not in liquidity. And thirdly, it's opened the question, you think this solidness has to do with regulatory flexibility? And there was a fabulous technical work presented. I think we should, in the insurance sector, you should study this very carefully, because that work, clearly it concludes that there's nothing to support this conclusion. And finally, thinking of additional provisions and expending, of course, will lower our profitability, but we don't want this to significantly affect our liquidity levels. The stress tests that were examined in this committee give us a nice account that this is the reality that we are facing. So from the financial sector point of view, I think we have this second component also as part of the constructive plan I mentioned, trying to continue putting together the building blocks of our virtuous cycle. So let's discuss the reality and the necessity for reform and the discussions that I believe the country should start having right now and put it on the table in a more urgent way. Let's talk about the national budget, that is, or the PGN for 2021. It's ready to be presented in the next plenary session. That is of 200. We see these 314 trillion pesos, which is our budget. With this slide, we can see a very important part is current interest. Of course, collections are a big component of this that we already spoke about. There's important capital resources for 134 trillion and other components of lower importance. If we continue to examine the side of the spending, we see the first reality in our country, which is, on the next slide, please. On this next graph, we can see how from the 152 trillion that we're gonna receive from tax collections, which is the previously listed current collections that we have enormous budgetary restrictions. We expect to collect 152 trillion, but we know that, and this is almost an arithmetic precise formula, we know that we need to have transfers to the state and regional and local municipalities for 47.7 trillion. We need to pay pensions for over 42 trillion. We need to pay the interest of this debt for an amount of over 33 trillion. And hence, we have 29.4 trillion of public collections to finance everything else. So that's all of the public bureaucracy, all the public diplomatic corps, the Congress of the Republic, the judiciary branch, the teachers, public teachers, and public investment. Hence, we depend right now in our capacity to achieve and obtain greater debt to make this a reality. And with the footnote, which is the additional necessities after several years of tough conditions, really, our debt is historically high. We expect to finish the year with debt well over 60% of our GDP, where we need to start thinking about how we can lower these debt levels, and we need to start thinking that now. Let's continue. So, historically, what's true is that the reduction of the process of obtaining debt, as you saw in these graphs, should be in the context of this virtuous cycle. The historically successful adjustment when you have high debt levels go hand in hand with economic growth processes that are favorable. And our economic growth process has had broad diagnosis. We enjoy these discussions, and we enjoy obtaining and seeking many inputs and having the academic discussion and always serious discussion based on figures. And we have several diagnosis options in Colombia, and we need to quickly, flip the page and think of this from all these diagnoses to the implementation phase through the regulatory effects and legislative effects, looking at so many aspects right now. Currently, we are generating and putting together the necessary inputs from our labor experts. We are also gathering what are the conclusions and final recommendations of the tax experts that is looking at the exceptions to be applied and the tax exceptions that have already been applied in different ways in different places of our country. We're in the process of implementing the recommendations from the capital market mission that was given to us last year. I think we've already implemented an important part of that, and we are accelerating in implementing the rest of those recommendations that were a total of 63 recommendations, some of them that are not so practical to implement. So within the universe of what can be implemented, we're trying to get those going. And we started last year looking at protecting the elderly and everything that has to do with protecting the elderly, looking and discussing with society as a whole and public opinion and every party that is interested in this, trying to look at the points of view that we want to present in Congress. Also, we are clearly aware that to generate this virtuous cycle, we need to combine the effort of shifting from this initial phase of discussion into a more effective implementation stage to attack the fiscal structural problem that we have in our country, plus what I've called the footnote, which is the additional challenges specifically that come out of this COVID-19 crisis. Now, the experts in tax collections mission leaves us with an important picture that I want to put on the table. We talk about tax exemptions all the time now. And I must express that I am surprised sometimes of the terms being used in this discussion. And why do I say that? Because since 2004, the government has the obligation of presenting the country a midterm fiscal framework, and it has the obligation of presenting the country with a whole discussion of what will be the tax expenses. I mean, what is the degree of exemptions that we have in our tax collection framework that is known as a tax expenditure? So it might be my decision that I charge 100 pesos to a sector, and then I return 20 of that, as tax returns. And that's why it's called tax expense. And there's three pictures that I want to show here regarding this topic that are worthwhile looking at today. Or not today, but in 2018, we expect it to be 8% of the GDP. It came to grow of 5 to now 6, 7.7, and now levels that you see in 2018. The bulk of these exceptions calculated for so many years in the midterm fiscal framework are the exemptions and exclusions that exist today in the VAT or value-added tax. So this needs to be it will be a very hard discussion, and would need to really talk with the expert about this dynamic. But the point I want to make here is that this is a first source of adjustment that can be potentially very important, very relevant as part of our discussion and as part of the evident conclusions to say that in our country, we need to combine efforts right now to elevate taxation in at least 3 points, or to account for 3 points of the GDP. That, sometimes I make comments like this and get in real trouble. Following is a timetable that these experts present us with, and in the last August, we launched, and the members of that commission that include Colombian officials, that include knowledgeable people of our reality and our tax history, and experts that have come to look at this from the outside, which are academic experts, very knowledgeable on the taxative law and options, but that have also participated in very difficult reform processes in other countries and understand the debates from terms of political economics in several countries around the world. And the combined experience of all these experts, and calculation that I made was that over 60 countries that they've helped or have had experience with. And in the month of February, we're going to have a preliminary report coming out of this, from which we can start, making more specific our proposals, combining with the experts of the proposals, and really having a richer or more clear discussion in that first quarter of the year, with the final report expected around April, starting with a second quarter of the year, and to be published in the month of June. This is the process that we have that involves these experts. I would leave it at that, just a short synthesis of the 3 points. First point, economic recovery has a very important fiscal component. As I said, that fiscal component generates either a vicious cycle, which has been the case in many countries in our region, or hopefully a virtuous cycle, as is our desire and the hopes that we have for this, and that we yearn for this, knowing that we have a difficult situation since we had to face this crisis with the public spending solutions that we presented, and with our income dropping, which bears greater urgency to have this discussion as quick as possible. And finally, I proposed that the financial environment right now, both in the international economy and for the reasons known, as well as in the domestic financial sector, and with the strength that our financial sector had right before the pandemic, and because of how careful the State Bank has been, the Bank of the Republic has been, to assure that the payment systems are functional, that the windows for available liquidity are the necessary ones, and because of the response of the financial sector during the crisis, which I believe has been exemplary during this phase, is what I was trying to explain. And finally, the fiscal challenges that have to be related to the words or term economic growth. So fiscal policy from all points of view, whether it's the most immediate things of tax reform and spending reforms, to the longer term that has to do with the labor systems and defining the elderly, and all the other conditions have to do with the story that we will be telling in the future. So we need to think about a truly constructive force, as to have the most positive and virtuous cycle, and combining the positive experiences from elsewhere and the negative examples from other places, not to repeat those. I'm so glad to be here. You honor me with an invite, and I am expecting to say what Dr. Hernandez and Sergio Clavijo have to say. Thank you, Miguel. That's all from me right now.
Thanks very much, dear Minister. your explanations have been very important regarding the current situation of the country, regarding the international perspectives, and especially the fiscal challenges that we will be elaborating on later. Now, I would like to give the floor to look at the perspective of the central bank, specifically regarding the monetary regulations. And I would like to invite Gerardo Hernandez, who is the co-director of the Bank of the Republic, who has prepared a presentation regarding the policy in terms of recovery. Go ahead. Good morning. Thanks, Miguel. And first and foremost, we would like to thank FASACOLDA for this invitation. For many years, I was able to attend this annual convention in Cartagena, and now we are doing it online. But naturally, I would like to especially thank FASACOLDA, to the director of the board of directors, and I would like to join in to the tribute to Dr. Fadul, who has been the president for many years. I would like to cordially greet my panel members, the Minister of Finance, Dr. Carrasquilla, Dr. Sergio Clavijo, who we have lunch with, and I pay attention to all of his concerns regarding the macroeconomic situation and the financial system. I would like to take this time, these 15 minutes, and by adding to what the minister has said, as to how the Bank of the Republic has acted in the face of this pandemic, and which have been our political decisions have been, and to present a few ideas on topics related to the economic recovery. So with no further ado, I'm going to start with this presentation, and I would like to start off by saying something that is worthwhile to pointing out again. As in the famous book of Ray Hadid and Roloff, this time it is different. So the shock does not emerge from issues of macro imbalances. It did not emerge from a financial crisis as it happened in the case of the Lehman Brothers with the collapse of Lehman. These are not sudden stoppages of capital, but this is a product of a decision of the authorities to protect the population of the effects of a pandemic, of nocive effects in the case of its contagion, and of course, to protect the persons. So this is a decision that did not emerge from an economic imbalance, and that authorities have faced on one side by way of fiscal measures, supporting the population and supporting sectors that have practically been closed, and the monetary policy, that is the central banks that learned from the crisis, the financial global crisis, about the need of offering liquidity to the economy as a way to relieve the nocive effects in the economy. And that lesson, unfortunately, has been learned. That lesson allowed central banks to react quickly, and that, of course, has also allowed for the recovery and the normalization to happen in a much faster fashion than in other moments. However, clearly, the effects are immense. Here in the chart, we can clearly see as to how there has been a drop of the growth in the economy, the GDP, in all of the different regions around the world. We can also see the area of Europe, especially heavily struck. We have the United States that has also been struck, and our countries in our region have been struck and impacted with a recovery that has been somewhat incipient for next year, and then trying to recover in higher levels. Same thing happens with the prices of raw material. You very well know that in emerging countries like Colombia, we heavily depend on raw materials, such as the case of oil. And in the chart, you can clearly see that additional to the drop in the prices of raw material, well, in the case of oil, we woke up with a headache of having a price that was below zero. And this is something that is highly unusual and that actually happened in the times of pandemic. And naturally, and with the slow growth and with drops in exports, with drops in consumption, with drops in investment, well, naturally, unemployment has also come in hand with the situation. And external volatility and a higher perception of risk that happened mainly in the month of February, March, and April, and that, as mentioned by the minister, it has resumed, or it has come back. And even though there is still uncertainty dealing with volatility, there has been a drop and there has been a normalization. So Colombia naturally was not an exception to this, as pointed by the Minister of Finance. There has been a strong drop in the GDP and an increase in unemployment, with economic activities in sectors that have been shut down. And naturally, well, under these circumstances, an event takes place that happens in almost all the countries, and it is that agents tend to start moving towards liquid financial elements. In the moment the pandemic starts, they start to use or to resort to financial institutions to get cash if they had financial products for terms. So let's say checkings accounts or savings accounts, with the aim to ensure having a high liquidity. And that, of course, naturally has an important effect that we will later look at in the financial markets and as well as the domestic market. Now, in the bank, and I believe that the minister agrees on me with this, in pointing out that in this time, we have a microeconomic situation that is solid, that allowed us to face the pandemic in a, let's say, decisive fashion. On one side, we have the credibility of the central bank, with a credibility that was started to be built many years ago, when they decided on having an independent figure of the central bank that has had a higher strength starting from the year 2000, when the inflation objective was taken into account, with an adoption of a exchange flotation that has allowed us to adjust to shocks of different nature, as it happened with the drop in the price of oil a few years. A fiscal situation that, as mentioned or shown by the minister, allowed us to adopt policies to face pandemic, and levels of reserves that were adequate, that were also strengthened with the negotiation of a flexible credit line with the monetary fund. And this negotiation was done amid the pandemic, and with an increase of that amount in that line that is nothing different to an insurance that the country has for eventual issues in the future. So basically, this is a line that is perfectly precautionary, that has an additional characteristic, and it is that this is only granted to countries that have a good macroeconomic management in place. So this is an additional situation. This is a solid financial situation, and I believe that this is a product of decades of work with the financial sector. This work has been permanent, not only with banks and the insurance companies in the market, that has allowed us to have solidity in the marketplace, with higher regulations, with higher oversight, and that, without a doubt, have been a very important asset to face the effects of pandemic. And lastly, I would like to highlight macroprudential measures from the Bank of the Republic to avoid these situations with the exchange rates, that go hand in hand with our plan of exchange flotation, that has also allowed us to prevent situations where there are leaps in exchange rates. And of course, these risks are kept in reasonable levels. Now, in the moment of the pandemic, well, I would characterize like two phases of the pandemic. A first one where very strong shocks take place, especially in the financial sector, in the markets of public debt and private debt, whereby we, within our response framework, what we intend to do is to provide liquidity for the good functioning of the payment systems, to see how we were able to stabilize those financial markets and facilitate a liquidity in the market with foreign currencies, as it also happens in these situations of crisis. And foreign investors tend to leave to investments in other currencies or assets that they consider to have low risk. And what this allows to happen is to have an increase in the exchange rate and movements in capital flows. And in addition to that, a monetary policy that is expansive that started taking place by way of a reduction of the bank intervention rate. So in this chart, you can see the different actions that we took throughout this first phase of the pandemic. Here you can see on one side how we increased transitory liquidity, and we reached, or we were able to have the repo operations, these sponsor positions higher than 23 billion pesos, which is an amount that is unheard of, that is completely exceptional. We increased counterparts, we increased collaterals, we increased terms, and on that, Fasecolta allowed us to include the insurance companies as counterparts of the central bank, and that was done being fully aware of the need of supporting naturally the sector in case of needing liquidity. And we established an exceptional possibility, an extraordinary, so bank institutions could go to the Bank of the Republic with portfolio collaterals. On another note, and in order to intervene or to allow for the normalization of public debt and private debt, we purchased, whether indirect lease, Ts and CDTs, for amounts closer to 8 billion pesos and is close to 3 billion pesos. And these are strong interventions, basically. And as we are going to see, they served for the stabilization of the market. On another note, we also took measures in terms of offering liquidity to the dollar market by way of auctions of forwards in DF, by way of swaps. We also had a reduction of shielding to offer more permanent liquidity to the system in such a way that this liquidity could be used to support the growth of the economy and naturally to be able to carry out the different activities dealing with loans. And lastly, we have been having a very important reduction of the interest rate for intervention. And this rate or this reduction has been reflected on the interest rates, both for liabilities and of the financial system, as well as the active ones. So let me simply use a very few minutes now to talk about an issue that I believe is important, and it has to do with the transmission of the intervention rate. Here, there is a wrong idea that every time the Bank of the Republic reduces its policy rate, immediately this is reflected on the interest rates of credits or loans. And unfortunately, this is not the case. Just in a recent work done from colleagues Galindo and Steiner, they show and they remind us as to how mechanisms of transmission take time and how naturally, of course, and depending on the segment of this loan, these could have higher impacts or lesser impacts or faster over time. For example, the commercial credit, preferential credits, these have impacts that are much higher. But in others, such as the case of the consumption credit or microloans, well, these are much slower in that transmission, especially or even more so in circumstances like the current ones where the loan channel are being fractured, where risks, of course, have increased. So measures that we have taken, and this chart is very important because this shows us how we were able to achieve stabilization of the public and private debts. This is an index of total prices of TES and private and public debt. And this shows us is that how in the month of March there has been a heavy drop in those prices, and then with the intervention, there has been a normalization of the situation to the point that right now what we are seeing are levels of prices of CDTs or TES that are very similar to those that were shown before the pandemic. Same thing happened with the exchange market, with currency exchange markets, where we can see a peak that has happened in the month of March, and then a behavior, let's say, that is much more similar to that of the normal one in the currency exchange market. Well, there is higher uncertainty, and this, of course, allows for this behavior to also be somewhat much more volatile. So which are the challenges and which are the projections to start wrapping up? So forecasts will crucially depend on what happens in these upcoming months with the normalization of the economic activity. We are already seeing indicators that show us that recovery of the economy, as pointed out by the Ministry of Finance. And this recovery is crucial, as he mentioned, not only for the fiscal aspects also, but also for the good functioning of the financial system. The acts of the board of the meetings of last Friday show us that the uncertainty is still very high, and that, well, there's a concern of having a second wave of contagion, and that public debt required, and if it happens with that new second wave of contagion, well, this will make much more difficult the transmission of the monetary policy. So the staff at the bank is going to show the report on monetary policies. I'm not going to go ahead of myself or skip anything, but what we have seen is that in the forecasts done in the month of April, well, at the beginning, with so much uncertainty, there was a vision that was much more pessimistic in terms of what could happen with the economy, and things, at least in the previous quarter, didn't end up being as bad as planned. And, well, we hope to have a recovery for next year. And as pointed out by the minister, well, a recovery that will start improving or leveraging on the improvements, both on investment as well as productive activities. On another note, inflation as the effect of the pandemic, well, it is below 3%, which is our goal on a long term. And what we see is that for this year and next year, it will be below that goal. And this has been said not only by the surveys. Here we can see what has happened with the inflation, but also as shown by the surveys from the expectations of inflations and from the financial documents that are being shown, and that for year 2020 and 2021, well, this inflation will get closer, especially in 2021, it will get closer to our goal of 3%. But in any case, there is some space for monetary policy if we take into account that inflation is still at very low levels. So in terms of employment, well, without a doubt, this is one of the highest concerns. I believe that all the economic authorities, we foresee an adjustment and improvement in the levels of unemployment, but we still keep high levels of unemployment. Therefore, there's an importance of having all those programs in place of fiscal support, as mentioned by the Minister of Finance. And lastly, a better behavior in the checkings account, that this year could be close to 3.7, and that, well, without a doubt, is very good news in the face of what we had been experiencing, especially because, and as pointed by the minister, the external conditions are still broad to finance this checking account. So for the financial sector, well, the minister has already pointed out the status that it is in, with agencies that are solvent, with very good liquidity, and naturally with the expectation of what can come out with the aids offered by the superintendent. The good news is that the information offered by the superintendents is that the financial agencies or institutions have had important provisions very well over what was in the current situation. And even though this affects their profitability for the end of the year, well, it will show very good cushions in order to face situations of poor portfolio and situations of normalizations in the portfolio, to the extent that there's an end of aids. And there's an establishment of this. The superintendent has called PAC, which is a program for assistance to debtors. So the portfolio has had a huge drop, as we can see in the past weeks. There has been a slight recovery as a product of the normalization of the activity. There are activities that show us clearly this phenomenon, such as the case of microloans that practically at some point were not granted, or we could not grant these because of the methodologies and the way as to how they work. But that to the extent, or in the way as we have been normalizing the situation, or the situation has been normalized, they have been recovering. So in conclusion, the tasks at hand to have a recovery, or that is to keep the perspectives for recovery next year, are on one side to maintain a monetary policy that allows for a recovery of the economy, a monetary policy that is broad, but that at the same time takes into account the situations dealing with risk and volatility that are proper to a circumstance of this nature. The second, without a doubt, is to preserve the solidity of the financial system. And, well, maybe I'm going to get into trouble here, but it's about drawing the attention upon the needs of understanding the activity of the financial system, of understanding the financial intermediation activity, and to also understand that it is not a moment to establish regulatory reforms that forget about the risks and forget about everything that has happened, and that allows us, or that have allowed us, to go over this strong shock in the financial system. The financial sector, and especially in terms of loans, we have to recognize that the circumstances have more risks, and therefore they have a toolkit that they have to apply in these moments, so that the situation can go back to normal, so where we can have growth in portfolios with a very good quality. And lastly, and as pointed out by the minister, a fiscal framework that will allow us to continue with that boost for the economic recovery, but that at the same time establishes a path for a stability in the future. So that is the presentation that I had for today. And we can probably delve into this in the Q&A session later. And once again, thanks to Fasecolda for the invitation. Thanks very much, Dr. Gerardo. And now, to finish this phase on the economic analysis, I would like to give the floor to Dr. Sergio Clavijo. Dr. Clavijo has the advantage of the fact that he went through the Ministry of Finance. He was a member of the board of directors of the Bank of the Republic with a long term in the guild sector, and now he's representing the academia, making important contributions on the macroeconomic situation. So go ahead, Dr. Clavijo, and thanks a lot on behalf of Fasecolda for joining us today.
Thank you, Dr. Gomez, and also for allowing me the opportunity to share this panel, no less than when the Ministry of Treasury and Dr. Gerardo. Also, my thank yous to Dr. Javier Suarez. Special salutation to Mr. William Fadul, that I also see as a great humanist. So, going back to the debate of the microfinancial situation, I'll give you my quick vision of what's the international macro scenario to finish off what my colleagues were describing and what are the challenges in the fiscal and labor and monetary exchange scenarios. So thinking of what in the United States is facing, a contraction of almost 6% was expected for this year, and a rebound less than proportional the upcoming year, maybe 3 or 4%, and perhaps the contraction of this year will be less than expected, maybe 4.5%, but clearly versus the 1.7 that was expected before the pandemic, and with a deceleration that was already present since 2018 in this country, where the fiscal and monetary challenges and stability also on the social front in the United States are just unheard of. In the Eurozone, we see similar situation with the difference that we expect a contraction of 6%, but a rebound of also 6%. It would appear that the state of the welfare organization that the Euro Union has usually had will be a very favorable factor in the recovery that appears versus the U.S., more favorable when you look at 2021 and 2022 scenarios as a whole. Now, as we will see in Latin America, in particular Colombia, I mentioned, and the Ministry of Treasury will say, reaching the GDP real production levels of 2019 will perhaps only take place in 2022 or 2023. But although visually we see a recovery in most countries, there is great difference here in the magnitude of the rebounds that we're seeing and recovery for 2021 forecast. And there was where we have the structural gaps at a structural level, power generation level, lack of export product generation from Colombia, which like Chile and Peru have a 70%, price when we talk about commodities, and price of petrol just on a stalemate compared to the historical, where we have $40 per barrel Brent. Very hardly will it go over 45 next year, and then we have the twin deficit coming in, which I would talk about. Now, the advantage that we all have, and both the minister and Dr. Hernandez mentioned, is that the origin of this is not a financial crisis, although we could end up with a financial crisis. It would appear that in a window from 12 to 24 months, with the discovery and massification of this, application of this, recovery could be quicker, and interest rates as low as 1%, like in the United States, and of 0 in Europe, could by 2023 make it so global authorities need to change their mindset from monetary and fiscal policies of a great magnitude that, depending on how fast this recovery is, and depending on if it's quicker than in the Great Depression or in the EMA. But I think we all agree right now, and in particular, I applaud the management of the policies that the Ministry of Treasury, as well as the Bank of the Republic, has engaged in, counter-cyclic policies. But although with what has elapsed of 2020 so far, has evolved the way it has, I think we need to move in the direction that the Ministry of Treasury says. We are talking about the labor front and the tributary front, and now from September or until February next year, we are going to have to talk about structural reform so that this recovery that we expect in a time frame from 12 to 24 months can carry the burden of not a 2 or a 3% of what has happened like in countries like Brazil, but a much more dynamic recovery of 4 or 5%. But this will not happen on its own. It requires, activism. I will call it legislative activism, and a clear understanding and vision of structural problems that we already had, and that we need to make use of this crisis to leave those behind. Look at the case of the U.S., the labor flexibility market in the U.S. that enables that it goes from the best record in 50 years, an unemployment rate of only 3.8%, deteriorating because of the pandemic to rates that were around 16%, but on the average have been around 13% really, and like colleagues mentioned, is already in 8.2. So that labor flexibility is what allows you to, fire and then hire people again quickly, which in systems like in Europe will be facing this challenge and this deterioration of much lower magnitudes in the labor market than what we're seeing in Latin America, in Colombia in particular. The case of Colombia is pathetic, really, labor-wise, where we came in 2015 when petrol prices deteriorated, already going up in unemployment rates that will from 9.7 in 2017, arriving at 11 point in the starting the pandemic, and now almost around 20%. As a matter of fact, the implicit unemployment rate that Colombia has is of 26%. Once you correct this, considering the drop in labor share rate or participation rate. So really, these 6 points in drop in labor participation rate or employment rate is dramatic, where we have now a 26% global rate. So thinking of what my colleagues have said, in particular the Minister of Treasury, saying that perhaps we have a second semester with a better rebound effect. We're going to see how we go from a 10% contraction seen in the month of August. Perhaps on the average of the quarter is not a 16% drop in GDP, but a 6% drop in GDP, which is and maybe a less negative figure of 3% to close the year. So we have a negative contraction of 6%. Unfortunately, the investment bank in Wall Street is looking at Colombia with a deterioration that could take it to -8 for the year. And regardless if it's -6 or -8, my concern here, or the factor that I'm concerned about, is that the rebound in 2021 is clearly of a greater magnitude. Whether we drop to 8 or 6 this year, very hardly are we going to grow above 4% next year, considering the dependency on commodities and the other determinants I mentioned. And on the labor front, even if we engage in a labor reform that we're all promoting of an additional reduction in the salary costs and compensation that dropped but it's still in 50% and going down from 66%. But very hardly is Colombia going to be under a 12 or 14% unemployment rate for the next 12 to 18 months. But if we are able to put these reforms forward and we have a more flexible labor market like in the United States, very surely with this labor reform in 2022, 2023, we can finally go back to a one-digit unemployment rate and reach 8.5 or 7.5% that we have back in the 1980s, where we said that the labor market was actually doing very bad, is what we said back then. Now, thinking of credit expansion and the flexibilization of collections and contributions to capital, we see a jump from 47.48 to 51 in the relationship or the ratio between credit and GDP. And the growth in this has not to do so much with disbursements, but like Dr. Hernandez mentions, which is right, but also with the fact that we're not contributing to the capital side. But notice that in levels of 47 to 51% of the GDP, we complete a stalemate of almost 6 years now in this relationship of leveraging Colombia, if you will. So I agree with our colleagues in saying that the quality of Tier 1, of Basilea 3, Basel 3, there's something that in the system is not right. The same figure of 50 in leveraging of financial credit is, or if it's 70 or 80 in the case of Chile, and is read as the double of what it's in Asia. So there's something that's not operating well in Latin America, and in particular in Colombia, where it took us 10 to 15 years to deal with the scars of the mortgage crisis that left us with GDP, credit rates of 28%, and we're on a stalemate at 50, and it's going to be very hard to escalate this with the perspectives of deterioration of our collections, even if we don't go into a financial crisis, where I agree with our colleagues, it's not the case of Colombia. But there's something that's not allowing for the credit sector and for the insurance sector as a whole to be able to be a leveraging element to drive a growth that today, thinking of Colombia's potential, is between 2 and 3% instead of 4 or 5%. Hence, we need to rethink, all of us, we need to rethink that it's not only about the liquidity and solvency ratios are the ones necessary to prevent a crisis, but that the financial sector as a whole should be supporting point that is much more agile. And I repeat, it's not an issue of pandemic. We've been 5 years, at the same level, just dragging in Colombia, Chile, and Peru. That was, leading to a certain way this process, and we're not obtaining the necessary leverage that the company requires. At inflation levels, we've seen how we've dropped close to levels of 3% lately to core inflation rates of 1.5, and I think I'm not mistaken if I say that we'll be around 1.8. So that's with this rate of 1.75 repo that the Bank of the Republic has positively included. We have a zero effective rate, but inflation will rebound, and both rate given forecast as well as the surveys show rebound, perhaps finishing next year close to 2.75 or 3%, meaning that we need to make the best use of this good time where we can think of counter-cyclical fiscal and monetary policy introduction to accommodate, once again, a real sector and an exporting sector before we have a real inflation issue around the corner in 12 or 18 months. Okay, so the Bank of Republic has acted very well as a central bank, reacting quickly. The Ministry of Treasury, at the head of that board, I'm sure has been leading the reaction of a monetary counter-cyclical policy. And we see how it went very quickly to 1.75. I was one of the ones that said 4 months ago that saying we were headed in this direction of 1.75, and I applaud the agility with which they did this and the promptness, making use of this window of no inflation versus necessity conditions, and the stimulus that can move us in this direction. So I want to make the best use of this comment in my presentation, thinking of fiscal issues, looking at government bonds, the TEEs for us. And it's something that the ministry has been focusing on from the public credit side. And then look at the benchmark here for the 10-year figures that have not affected, and is around 5.7. But there is an increase in inclination factor going from almost 250 to 300 points. That tells you that the country risk, implicit risk per country for Colombia, both in real as well as an inclination of the curve analysis, are very associated to a country with a certain level of investment. So to maintain the degree of investment in Colombia, the inclination of this curve should be in around 200, no more than 250 basic points, and we have 350 right now. Of course, with the fall, in the short term of the monetary market and the reduction of 250 basic points, that I believe is a very positive action from the central bank. But I think it's important for the insurance market as well, thinking that an emission and an extension of this curve beyond 10 years, thinking of, bonds of a 30 years term at 7.25 in their issue, will give us a higher country risk. And not to discuss implicitly if Colombia can lose their investment status or not, but more in the lines of the discussion that if we don't execute the necessary structural reforms that the ministry mentioned, that we've been talking about for some time now, and that he very accurately says is overdiagnosed, and we need now to act upon, thinking of the tributary side and the labor side. But I think that the essence of this story is clear, and we need to really, engage the legislative branches as with pedagogy, as you will, is to teach them a little bit, if you will, so that in 10 years' time we can reduce to this 225 points and maintain the level of investment that we have. I think is a clear message that we need to start conveying starting on September until we close this year, and it's the best time to start speaking of these topics right now. I close my presentation now by saying, showing you this graph that simply calculates the relationship between the debt, just the gross debt of the national government versus the GDP. Today we got the figure from the Ministry of Treasury saying that we're parked in levels around 60 versus the 51 or 52 that we closed 2019 with. And our calculations and what I calculate with my research colleagues is that with this status quo dynamic, very surely we're going to overflow in 1 or 2 years and the 70% threshold, thinking of this relationship between gross credit and GDP. And that's not sustainable to maintain the degree of investment we want in Colombia. Hence the Vice Minister of Treasury, when he presented the budget, and I understand the message that the ministry is giving us today, where he says we need 2 points of the GDP, the highest collection or with collection ease that we need. In, I think one of these points would be to substitute non-salary burdens that we have, and 2 points as a sine qua non condition to prevent the overflowing of this relationship, this ratio that it is in 60%, very surely going to close around 65%. But it's not compatible to overflow the threshold of 70% with a country that wants to maintain the investment standing that we have today. So there's this quick deterioration from 60 to 70. In that time, Brazil lost its investment rating, and today the unattachment of the fiscal leveraging of Brazil puts it at 95 right now in this index. And we expect that during this unattaching of the leveraging, even though they have good collections, not of 14 points of the GDP, but of 35 points, but still we expect them reaching of 105 points in this debt ratio for Brazil. So before Colombia goes into this spin of fiscal unattachment, unanchoring, we need to make use of this opportunity that the central bank has put together with the Ministry of Treasury to apply contingent credit that has just been broadened from 11,000 to 17,000 billion dollars, and as we've been announcing, or $1 trillion, and there should be going to be a disbursement to the Ministry of Treasury of about $5 billion, with which the balance sheet that has been very moderated in this expansion to 3 points of the GDP, or even to 5 or 6 points of the GDP if we consider some exchange rate operations, could move up to 10 points of the GDP as long as these resources are properly used, as the Ministry of Treasury so well puts, focalizing in the priority elements and providing the necessary elements to support the balance sheet of the central bank, jointly with the tributary and reform that we need, where we think we're going to have this big push closing this quarter, this before we have the elections for the second half of the year, so that Colombia can fix and maintain this investment standing that has cost us so much, and that has when it's been so positive that we are now members of the OECD and that we have the obligation to maintain, really. So that's what I have to say. I share the strategies of the Bank of the Republic and the Ministry of Treasury, but because I share them, I think it's the time to quicken our pace to ensure that all this debt that we've had to accumulate and having because of this pandemic is not affecting our investment rating. Thank you so much, Dr. Miguel.
comments. I believe that these are perfect to segue into a series of questions that I would like to ask the guests today. And maybe I would start off with the Minister of Finance, Dr. Clavijo, concludes his analysis by reflecting on the issue of the level of investment and the importance that the level of investment has for the future of the Colombian economy. The insurance sector has reserves that are colossal of around 80 billion pesos in reserves, which is the money that has been used to pay sinister cases that, of course, this would have an impact, a serious impact in terms of the level of loss of investment. So, Minister, if you could maybe share your vision on the level of investment and the possibility that Colombia has of keeping it in the forthcoming months and years. Yes, with all pleasure. I have the following perception. First of all, the increase of debt is a global issue. That is, it is going to be much more difficult for rating agencies, risk rating agencies, to keep a spreads in their perception of risk, given that the shock is global. In other words, it is a change of level, and a first decision that can be made is that everybody will lose ratings as we all get into debt with 10 points of the GDP, just to put an average number in. And those increases of debt in advanced countries is much higher, as I showed you in one of the charts. So this is an issue that elevates the global risk. And the second consideration that has to be brought up is that this is a context of high level of debt with interest rates that are unusually low. In the United States, for example, there are economists of first level that believe that there is an idea that there are interest rates like the ones that we are seeing that are lower than to the growth rate. So the situation of debt and risks associated to these are ones, and with higher interest rates, well, that's a different risk. I'm talking about Larry Summers and Blake Chardy and the economists of that level. So without a doubt, these will be interesting times for the risk agencies or rating agencies. I think there are many challenges ahead of them. They are not usually given to reflecting on macro situations, but instead just a checklist, calculation lists with indicators, and that is the traditional task at hand they have. The crisis of 2008, for example, when they believed that some of the derivatives or the byproducts of mortgage loans deserved the rating of AAA, and they lost a lot of credibility because of that. So I believe that this is an opportunity for them to recover that credibility that they lost in such a high level in the crisis of 2008. To show their analysis in much more depth than that they have shown, and to take into account the global nature that the increase of debt has, that Colombia is already, of course, aboard in. And second of all, the situation that I showed you in my presentation in terms of the situation of the financial markets on an international level. And of course, this is unusually broad in terms of the availability of loans and what this says about the levels of debt. And of course, the third component is the fiscal history that has a virtuous circle implied, starting from a fiscal dynamics and proposals of policies on a fiscal level, and to prevent these fiscal announcements and these decisions to involve what that we are specializing as a region, and these are vicious circles from the fiscal levels towards the private sector, and from the private sector to the deterioration of the fiscal sector. So these are the three components. I would say that these are interesting times for those rating agencies. So I believe that they are going to include much more seriousness to the macroeconomic analysis than what is usual for them. So in that sense, with a fiscal history like the one Colombia has been showing, and that it is recognized for in the recent decisions in the directory of the fund to establish that part and to keep that level of investment. Dr. Gerardo. In the months of March and April, there was a huge volatility of markets. So did the bank open, or the bank generously opened liquidity windows? The insurance sector, well, thanks, of course, or have had that possibility of access to those mechanisms of liquidity. Those windows, are these going to remain open for what terms? Well, Miguel, I believe, and as I pointed out in the presentations, one of the biggest topics that we learned is that in moments of crises and moments of huge volatility, these alternatives for liquidity for markets are essential. In that sense, I believe that the message of the Bank of the Republic is to be present, of being ready to offer that liquidity necessary so that these markets of public debt and private debt that are essential for the complete structure of the financial system and its prices could take place. And in that sense, the lines or the mechanisms have remained. And in the board, we believe that for now, there is no discussion on its use. We understand, as the minister said, that we are living through very hard times, very interesting times, and believe that the best contribution that we can make to the financial system and its stability is to provide the correct signals that if any difficulty happens again, we will be ready to offer the liquidity necessary for the good functioning of the payment system and to assist the financial system as a whole during this recovery stage. Thank you very much. That comment is very important. Dr. Sergio, let's talk about reforms. You mentioned that reforms were necessary. You insinuated about the work reform as a mechanism with flexibility to recover the capability to generate employment. But there are others. Pensional reform, for example, which is a reform that, as shown by the Minister of Finance, has a heavy weight on expenses and budget. So how do you see it? Which reforms do you believe are urgent? And what recommendations would you offer on the legislative work on this? Well, this question is highly relevant, Dr. Miguel. And listening to my very good friend, the Minister of Finance, in his very complete, and I actually really liked his presentation, these 360 view of the financial aspects, the fiscal aspects. This reminds me of the presentations that he made in his past life as Minister of Finance from the Uribe administration, because here he has a slide that allowed him to talk about the 3 checks of the Ministry of Finance. And these checks of the Ministry of Finance appear once again as an element of very high inflexibility on the side of expenditure. A check has to do with territorial transfers. Another check has to do with the interest of the debt that necessarily will have to be broadened because of the widespread of the debt. And the third check has to do with the pensional aspect, because with equal amounts of 40 billion, each one of them. So I would think with that if the Santos administration talked about this for 8 years and they were not capable of making a pensional reform, well, in the second year of the Duque administration, well, this issue should have been addressed. It should have been or passed through Congress. Unfortunately, the pandemic came in, and going into the third year of the Uribe administration, well, we see here the pensional aspect that was so vital for 12 years, and I believe, and I hope to be wrong, that the Duque administration does not see the political equity to correct such an important and structural aspect, among others, with a severe issue of inequality that multilaterals such as OECD, the World Bank, and the Ministry of Finance is aware of that. Look at the paradox here, Miguel, because I'm talking about the most essential aspect that has a history of an overdiagnosis. In the end, as a product of the pandemic and the weakness and the polarization of politics, will remain for the next administration. So I see that from the official speech and the alignment of political forces, it would seem to be focusing, this agenda would seem to be focusing initially to the tributary aspect, and hopefully they hook in the work aspect so that it is not just a tributary or tax reform per se, but a tax reform that fosters the work reform and the formalization of work. And what was mentioned is that to substitute 17 point items of the 50 that the firms have, and that makes formalization much more expensive, requires one more point of recollection. So the Minister of Finance has been clear on this, and he has been clear on this for 15 years. He has worked on it with Congress, and I recognize this because he did this in the past tax reform. But here, this has not gone through Congress. The generalization of tax on that, and it takes place once it is changed with a 1 point of the GDP, and this has to happen today. Has to go from an effective rate that does not go over 10 to a rate of 19. So I'm going to wrap this up by saying that it would have been very useful to have had addressed in the first 100 days of administration the pension aspect, and it was not done. So unfortunately, this issue will remain for the next administration, and hopefully the scarce political capital and the clear understanding that the Minister of Finance has on this issue dealing with tax and work is an issue that will come up in the months of September and February of this and next year. So this, I believe, would be the priority issue. Minister, a second question. As Mr. Sergio Clavijo has mentioned the tax aspect, and you have made a clear reference to the importance public expenditure has for the sustainability of tax in the country, a fiscal one. I would like to ask you, how do you work on a tax reform that does not compromise the reactivation of the economy? How are you able to conciliate an increase of the fiscal pressure with the needs, the demand of generating a higher economic growth? So that tax reform, I believe, will be key, not just for the reactivation, but also for the recovery of the economy itself. Yes, with all due pleasure. I believe that in Colombia, we have a tax setback in our legislation. Besides structural issues within the statute, there is a setback in the sense that we have an economy whose backbone is a society that is in increasing process of becoming a society that is middle-sized. These are urban societies. These are societies where there's much more information, societies where there are much more demands of public assets and public expenditure. And this is a reality that we have almost from the Constitution of 1991. So this is a favorable event. This has been welcomed, and this is something that many countries go through. And when they quickly go through it, as it happened with us, well, countries get into a problem called, in academic literature, a trap of middle income. So basically, we have aspirations of public assets linked to the international experience of countries that took many more years on building it, and those aspirations are real, and they are part of the democratic debate. But on the other hand, there is a setback in the tax structure and in the capability to respond before those demands. So that tension has been increasing, and I believe in Colombia it's touching the limits where we will have to sit down and think. Now, second of all, that setback is stated in a tax statute with premises that are not valid and that increasingly are not valid. The first premise is that it is progressive, or that it has a progressive nature to put taxes on the companies and not the people with these income withholdings. So that type of truth in our debates. What's more, there were moments where we would put tax on the equity of companies. So for those who defend this, they have always thought about it as a tax that is distributed back to the people, not the companies. So we have that first wrong framework. To your question as to how to have a tax reform that does not punish the necessary growth, well, we have to go back with that first component of our problem. And we have to be fully aware that according to the studies based on accounting of companies, taxes in companies is very high. It is very high. And that, well, there are studies on that where certain qualitative leaps that go with the national accounts to the concept of taxing for companies. And these are conceptual processes that are not applicable to the daily activities of the cash flows. But if you look at the studies being done based on the cash flows of companies, well, studies like those of Gomez and Steiner, that is somewhat outdated, but not that old, from 2015 or similar to that, where they show that taxing for companies is very high in Colombia. That is, it was higher than 50% of the effective tax rate. That is, when a young company in Colombia wants to set up a business, they work 20 hours a day to achieve it. They find the funding. They perfect their idea. The bad news is that the following day, they already have a majority partner, because it will take over 50% of the eventual profits. And even if the company doesn't have profits, they will pay for taxes of different natures. So that is the first hurdle that we have, which has to do with communication. In an economy that wants to grow, it cannot be based on progressiveness of the tax regime. It's based and supported on the idea that company taxing is the axis of progressiveness. And that is our second setback. We have much more information on the transactions of the economy. Right now, DIAN has achieved something that has not been perceived, or that has not been perceived under the radar. So in 2018, we had treaties, flows of tax information with very few countries. Today, we have that over 100 countries, including Panama. So the flows of information that are necessary to have an adequate follow-up on the true flows on taxes in our country, both for natural persons as well as for legal companies and persons. Well, it's much more sophisticated, and our tax statute does not privilege those uses of information, and we have to achieve that by way of administrative or legislative fashion for that second conquer. And third of all, I believe, and I showed you this in the presentation, and as mentioned by Dr. Clavijo, and this has to do with that is initially correct at the beginning, or in principle, but there are studies, historical studies in Colombia, that put it in a perspective where the tax or the value-added tax is regressive. We have designed a system whereby we remove the components of the returns on that. So that should be a discussion if we want to mention it in a progressive way. This is the discussion based on the fact that the most harmful actions of this regressiveness of these taxes are removed from these returns. So there are other methodologies that are probably better, but this is a Colombian methodology, and it's working and it's being done. So that qualitative leap has to be taken, because the fact is that we do need more collections, and we do need, as you well mentioned, this tax influence will not go against the private initiative, therefore formal employment and the well-being of citizens. I believe that those are three hurdles, and let me repeat. The myth that the progressiveness comes from putting taxes on companies and not persons. Second, the myth that natural persons are not subject, or we don't have the enough or sufficient information on international and national levels to have a true tax statute. That's a myth. I believe that we are already capable to do it in an economy of information that is much more possible. And the third one has to do with the fact that irremediably the VAT, because of progressiveness, it should be removed from the table. I think it has to be put on the table, And this is a third point. The fourth is, once we fix company taxing, I believe that those exceptions or that are not compared with the exemptions in the tax regime and the VAT regime are part of the discussion. And for that, we have these experts working on this, and I believe that we are going to have very good conclusions in that regard. Thanks, Minister. Dr. Gerardo, I'm going to tell you the truth. Never in my life did I think about seeing in Colombia an interest rate of 0. I never thought that I was going to see it. I believe that I would never see this. We are at 0, basically at 0. And so what's next for the monetary policy? When the interest rate is at 0, what is the role of monetary policy that you have quickly mentioned? You have responded quickly to that. But it would seem to be that the role of the bank has been met. They did what they had to do, what they have to do. So this is a problem that all banks, all central banks have around the world, or most of them. So what have you thought about that? Just so that people can have a horizon as to what is next, what comes after this. Yeah, that question is, let's say, as Perez would say and Francisco would say, I love your question, when they say. So it's actually a question that is very difficult, very complex to answer to. And it's part of what we are facing or discussing about at the board of directors. The last one was not a unanimous decision, but this was a decision where there were 3 votes of people that thought that the intervention rate of the bank should be kept stable, while 4 members of the board believed that there was some room for an additional reduction. So the future is decided in each meeting of the board. The future is decided by looking at the information, by looking at the risks. The group, and this appeared in the minutes, in the minority group, believes that if we continue reducing these rates, we can go into higher risks given the situation at the moment. The majority believes that there's still room for a stimulus, as pointed out by Sergio. So without a doubt, currently, and as mentioned in the last slide, and in my personal opinion, what the monetary policy has to guarantee is a stability and assistance in terms of improving the economy. But to a great extent, and as pointed out by the minister, it is in the field of the fiscal aspect in terms of supporting and providing an additional push to that improvement. Without a doubt, it is about keeping the solidity in the financial system for the credits to flow, and to flow in an adequate fashion so that the risks are taken into account. And the future of these discussions will focus on those matters. Jose Dario Uribe, who was the manager of the bank many years, said in many presentations that the good macroeconomic handling will depend on 3 legs, basically, a 3-legged table: the solidity of the financial system, a good monetary policy, and an adequate fiscal policy. So to the extent that we have that good macroeconomic situation, and after this pandemic, once it's establishing and working correctly, the other 2 will come in with the reforms mentioned by Sergio, with the fiscal stimuli and the improvement on an international level that has been heavily struck. And without a doubt, that is, well, I don't have an exact answer to that, but I can tell the people that are watching us which will be the discussions for the future in the Board of Directors meeting from the Bank of the Republic. Dr. Sergio, not too long ago, I read a comment you made regarding the efficiency of public expenditure. Because it's about spending. You have to stimulate the demand. We need the economy to rebound, and to rebound quickly, and hopefully in the strongest way possible. But very little is talked about the efficiency of expenditure, because it's not just about spending, but spending well so we can see things. I would like a comment from you on how you see this. Well, I believe there has been a part of the polarization, two discourses. One that doesn't look at the figures, and this is the idea that everything is doing bad or poorly, and that in Colombia nobody pays taxes, that there is no progressive expense. And on the other note, it is most likely that the glass is half full. When we talk about the half full glass, in a recent document of the World Bank, we find that the state activity of charging progressive taxes, it has happened clearly from 2012, and with specific emphasis on 2017. And the last reform boosted by Minister Carrasquilla goes in the higher progressiveness that has to do with work profits, with capital, and with an issue of evasion, an illusion that the minister referred to. So on the legislative aspect, we need an improvement of progressiveness of higher social economic levels so that they contribute not with 5% of the effective rate, but a 30% effective rate. So the progressiveness rate that left by Obama before leaving was 34%. So for practical effects, higher social economic levels is at the same rate of Obama. Because at 30%, we have to add the effect of the taxes to the rich people that add 3 or 4%. So there is a huge progress made on that end. And as mentioned by the Minister of Finance, even though there are issues in the tax statute, there has been progress made a lot. And today there are mechanisms to exchange information, including Panama, so that for those who have that wealth and have those cash flows in their revenues can pay whatever corresponds. And the legislation has done the right thing in terms of progressiveness. So the state has improved a lot in the past 10 years with effective rates that for the higher social economic levels are 5%, according to records from DIAN that are now around 30%. The other element where the intervention of state has improved a lot, and I highlight a lot, has to do with the application of the pro-poor that has to do with education, health, and especially with what has to do with the elderly and the homeless. But the amount aimed at the homeless elderly. In a country that has no pension, only for 1 out of 4, 2/3 parts of the elderly that are older than 65 today tend to fall into poverty. So let's build on those two elements that have improved progressiveness on taxes. And here I include the very good message from the Minister of Finance. So let's not just talk about the taxes to profit, but to regressiveness in terms of when the rich are not charged for family basket and with rates of 10. So the best example is with Chile. Chile on computers, they separate the 19%, and in paper they pay 19. And we compensate the less favored class or society with subsidies focalized on the poorest in education, health, and today on internet. But where we haven't been able to make progress is on the pensional aspect. That takes 4 of the 9 points of the GDP that is spent on the social front. So as a conclusion, before the pandemic, there were protests in Chile, in Ecuador, Peru, and Colombia. They were already destroying Transmilenio with a mindset that is completely wrong in terms of what was happening in the country. And it is that they would say that there was no tax progression or focalization on expenses. And here we have the figures. How Colombia has been able to reduce the Gini in close to almost 10 points above the GDP of the Gini. This figure is the same to the one executed by Chile when this efficient and efficacious state also intervenes. So what we have to do is to speed up, to focus on CISBEN, improve the component of the basic income due to the pandemic, and to move in the right path in terms of collecting more to be able to provide subsidies much more focused on the poor, and that the firms in one way or another, in my opinion, and maybe here there's a discrepancy with the Minister of Finance here, because when we look at in the OECD, how much a firm pays on average for all the sources, not just for income taxes, but everything that has to do with the ICA or other taxes. An average figure of the OECD is that the firms pay 45% of profits. And of these, roughly 30% comes from payments dealing with income taxes. It was 63 in 2008, 2010, and we have reduced it down to 45. So in that sense, I believe that there has been a good movement in the Santos administration in their second reform, and then the Minister of Finance in his last reform. But in my opinion, they went overboard on this, and the collection of firms could be training before the pandemic in 1 point for the effective collection because of the compensation, exaggerated composition of tax, of the VAT, and the import of machinery. So that is technically correct, but when the law does not allow for this, we cannot continue compensating. And in my opinion, the income tax of firms to 33, I believe, is good. And when we look at the set of contributions made, it is 45, which is the average of the OECD. And in my opinion, that is a component that has to be added to the collection of tax that would give us a point, which for the firms it would be 0.5, and for the rich households it would be 0.5, for a total of 2 for higher collection. Thank you. Well, thanks very much to the three. You have been very generous with Fasecolda for providing us with all these elements of the environment to handle portfolios and the insurance companies to better understand what country we are in and where we're headed. And I believe that this morning has been highly fruitful. So thanks, Minister, Dr. Gerardo, Dr. Sergio. I believe that this is an additional this is important for our convention. And once again, on behalf of all the insurance companies that operate here in Colombia, we would like to thank you for giving us what has been most valuable from you, which is your knowledge and time. So have a good day. Thank you.